Welcome to video number 3 in this 3-part video series. I want to talk you through capital allowances, how you can earn £1 million a year without paying any income tax, completely legally, as endorsed by Her Majesty's Treasury right behind me. The amount of money you earn over your lifetime, where does it all go? What are your biggest expenditures, and how come at the end of your life, typically people don't have a lot left? If you've enjoyed this video series and you want to take the next steps, let's talk about what the next steps can be for you so that you can follow my footsteps. I've bashed a hole in the jungle, the financial jungle. A lot easier for you to come walking behind me in my footsteps than cutting your own path. So anyway, let's go. Imagine you're pretty well paid and you're on a salary of £80,000 on average over your career. Let's say you work for 40 years. Well, £80,000 for 40 years, 4 decades, that's 3.2 million. Have you ever stopped to think, where does all my money go? What's my single biggest expense? Is it housing? Is it petrol? Is it food? What is it? Most of that money is controlled by these buildings. I'm right next to the Treasury building. Your number one expense, bar none, over your lifetime, by a country mile, is tax. Learning how to control your tax, learning how to manage the amount of tax that you pay perfectly legally is a key part of you becoming rich and then staying that way. If you, like me, are fascinated by the idea of earning £1 million a year, just like Molly you heard in the previous episode, but you'd like that to be free of any income tax, listen on. The scheme, the system, is called capital allowances. It was introduced in the 1870s, but way back then, with Victorian Empire at its height, capital allowances were introduced, and they were introduced to reward risk-taking. And this was introduced as an incentive to get people to invest in businesses. One of the key differences between residential property and commercial property is commercial property is for business purposes. Residential property is for people to live there. Capital allowances, investing in land and buildings and fixtures and fittings and these days air conditioning, which they obviously didn't have in 1870. These are business expenditures in a commercial property. So when Molly was talking about taking a 17,000 square foot building, before she starts work to convert that to the 12 flats she was talking about, she can claim capital allowances. The capital allowance that you can claim is £1 million per person per year, income tax free. The second thing that you need to understand is, how should I buy that property? Should I buy it in my own name? No. Should I buy it in a limited company? No. You need to learn about something called a limited liability partnership. Why? Because an LLP doesn't pay corporation tax. It only pays income tax, or rather you pay income tax as a partner. But that is just a little snippet to whet your appetite about £1 million a year, tax-free. So let me take you back. I'm 17 years old, I've just left home, I've got some crazy dreams, and I've got £170. This river, the Thames, has got huge ties to me and my heritage. My great-granddad was a ferry boatman on the Thames. He used to row people from one side to the other for money. My granddad was a carpenter. He was a docker. So this river, in different ways, this stream of income in different ways, gave both of them a living. But that's pretty much all it gave them. They both entered a contract where they swapped their life for money. And I never wanted that. And so the crazy dream I had was that I could take the limited resources and I could turn them into a huge amount of money. I set myself the challenge of owning a property before I was 18 years old. And I had to ask myself some deep questions. How can I get a university degree? Because I'm an engineer, I wanted to be an engineer. But how can I get them to pay me for it? So I actually got the Ford Motor Company to pay me. So I used to get £1,000 a term. I did 2 terms a year at the college, and then 6 months working for Ford's. 12-hour shifts, 7 days a week. And so that allowed me to save up a lot of cash. Before I was 18, I had £10,000 in cash. On the other side of the city, East Ham, I bought a property, a flat, for £9,000. Spent £1,000 on it, and I sold it for £32,000. I tripled my money. Now that £20,000 profit, I added to the pot. I went off and bought a house for £30,000, but I sold for £40,000. And I could take you through the whole journey. But here's the bottom line. Before I was 28, I was a cash millionaire. And if you want to do something simple as investing in property, I'd love to help you. we're approaching the end of video number 3 in this 3-part video series. We've talked about capital allowances, a lifetime of earnings, where does it all go? So just as we close this video series, I want you to think about what are the chances of you doing it right versus somebody doing it right on your behalf. I think the chances of you doing it right because you care about you care about your family, you care about your loved ones, is close to 100%. I think the chances of them doing it right for you is close to 0%. The next logical step, if I've piqued your interest here over this 3-part series about commercial property, about pensioners, about unlocking your own pension, if any of this speaks to you and your desires, I want to invite you along to a completely free online webinar where we can go into this in more detail. Because what you've been watching is a series of relatively short generic videos, and I haven't given you the nitty-gritty that you need to actually do something about it yet. If you're ready for a completely different world where you are the one in control, click the link and join me for my online webinar, and let's go into more detail. Let's dive deeper on commercial property, and specifically not only what you can do, but how you can do it. Once again, my name's Paul Smith, Touchstone Education. It's been a pleasure talking with you, and I hope to see you on the webinar.